Hello, everyone. Basically, there's a few things we have to talk about today. We have CPI data coming out tomorrow. The market overall, in general, was weak throughout the day, but there's still stocks like the tech stocks that are skyrocketing. So we're going to talk about why all of these stocks are doing what they're doing, and then we're going to look at what the next steps are for the market. So we're going to take a look at the large tech stocks, the S&P, the NASDAQ, the Russell, the dollar, the bonds, the VIX, all that good stuff. All right, so without further ado, let's get started with the video. So Google stock pops as company unveils new quantum computing chip. So the stock jumped more than 5% Tuesday after the company unveiled a new chip the day before that it says is breakthrough in quantum computing, an emerging technology thought to one day replace its conventional counterpart. So basically what this means is it would take a classical supercomputer longer than the whole history of the universe, 10 septillion years, to solve. It would take a regular classic supercomputer 10 septillion years to solve something. Google just created a quantum computer to solve. It takes only 5 minutes using the quantum computer power by its new chip Willow. So what I've been seeing a lot online, so obviously zooming out, obviously this is very bullish for Google. That's why we gapped up on Google. Great. What I've been seeing a lot online is people are very scared or apprehensive about holding on to Bitcoin now. And they're saying that because of quantum computing, holding Bitcoin on wallets is basically not ideal, because if there's quantum computers that can break through people's like very hard equations like this, breaking a like the passcode for your wallet is going to be very, very easy. Now, the issue is that experts have been saying that it would take another 5 to 10 years before quantum computing power gets to the point where holding a Bitcoin wallet becomes a liability in terms of its security. So we haven't yet gotten there. So that is very, very interesting news, because quantum computing can be used for devastating things, and especially mining Bitcoin at very, very fast levels and getting into people's wallets. So that's something to take into consideration in the future, now that Google has basically made something like this public. And of course, as you can see, we gapped up. So Google gapped its way all the way up, and it is comfortable. It's comfortable here because this is very bullish news on Google. All right. What is not, however, bullish news is Nvidia. So I was explaining probably perfectly. I was explaining how going short over here on Nvidia would not be ideal. I would rather go short between the 618 and the 786% fib around 144, 145. That is exactly where we ended up going. And that's exactly where the market ended up tumbling. Now, this is the same exact sort of strategy that I employ during day trading as well. So this strategies that basically show themselves on larger time frames also show themselves on smaller time frames. And I was saying this would be an amazing opportunity. Number one, because we are showing bearishness. So what was I saying? We were showing a bear flag on Nvidia. We were showing a bear flag at a level of resistance. A retest to another major level of resistance here, which is the 618% fib, would offer an amazing opportunity for people to go short. Now, it's not just that. You want to think about being long down here. Where would people that went long down here, where would they most want to take profit? They would want to take profit at levels of resistance into strength. That's exactly what ended up happening. And Nvidia and the rest of the chip stocks are now starting to fall lower. So Nvidia took a bit of a hit. AMD also continuing to take a bit of a hit. SMH is also taking a hit. And as you can see, SMH is back to its all-loving 200 simple moving average. So the simple moving average that last time we came and tested, I didn't want to go long. I still don't want to go long SMH now that we retested it. And as you can see, every time we basically get to this level, it bounces. I'm not as convinced that we're going to bounce here. Primarily because There's more room to the downside on the chips, and the rest of the market looks like it wants to. We'll get to that. But I don't want to go long on the chips just yet. There's more room to the downside. So far, chips, SMH, taking a bit of a hit. What's not taking a hit? Google. And of course, also Tesla. Tesla is skyrocketing. It's continuing to do very, very well. It is very difficult to be bearish on a market when the winning stocks are doing so well. Tesla, Microsoft, still at the highs. This is not an automatic bearish sign. Amazon, still at the highs. We just gapped up an insane amount. This is, if yesterday was almost a perfect shorting opportunity for a continued move lower, great, right? But this is still showing there's a lot more upside potential. Google just gapped up. And of course, let's take a look at Meta. Meta is still here. Meta is still at the highs. Netflix is I was not as bearish. I'm not as bullish on Netflix. Overall, these large tech stocks are starting to show up here. They're basically starting to consolidate after a huge move up, which is normal. Now, let me show you guys seasonality. All right, so this is SPS seasonality. As you can see, in the middle of December, we get a bit of a pullback. This could be that pullback. That's basically what we're seeing right now, is we're getting a bit of a pullback, getting some weakness into the middle, into the last third of the month, and then we get a rally into the end of the month, and a rally continued into January. These pragmatically tend to be dips to be bought. So what I'm going to be looking for is I want to buy into the weakness in the chips, and most likely we're going to get into some 2026, late 2025 calls on these chips, but that's neither here nor there. We'll talk about that a bit more later, but regardless, these large tech stocks need a bit of a breather. And when you have Apple making new highs, breaking into new highs, while the Bollinger Band is still at comfortable levels, we're most likely going to see 250 on Apple. When things like this are occurring, it is very, very difficult to be bearish on the market. And once you see the winners, once you see a lot of these tech stocks start to take a hit, that's when it becomes a problem. But if there's 4 tech stocks doing well, 3 or 4 not doing well, that's not a reason to automatically be bearish. Now, the interesting thing is that the ES had 2 closes. We finally got 2 closes below this uptrend line. This is definitely not bullish, okay? And we also closed below 60.50. It's definitely not bullish. This generally should continue lower. We should get at least a retest, maybe to 6,000. Generally, that's what ends up happening. Back to this level of support, it would be healthy for a bit of a pullback to that level. But this is the reason why, when you're looking at the larger time frames, this is the reason why all throughout yesterday, throughout today, I've been leaning bearish. That's why we hit these puts very, very, very well. Today, we hit multiple 80%, 70% plays. And it worked out very well because the larger time frames on the S&P, on the NASDAQ, were showing weakness. And thankfully, it showed in the overall market. The NASDAQ, given the strength and the weakness and overall, regardless, we're still holding this 21,340 level, which is the prior all-time high. We're still holding support on the NASDAQ. But then the Russell is starting to show some weakness. It's still, it's the Russell and the SPY and the NASDAQ should be falling lower. Great. But here's another thing that we have to take a look at is JNK TLT. This is not entirely bearish. Now, what you want to see is this show a lot of weakness. Once this shows a lot of weakness, that's when this weakness starts to show in the overall market. What we're seeing is a bounce. This is not a lot of weakness. These are green candles. This is one issue currently for the bearish bias. Equities are bullish, and the JNK TLT pair is still bouncing. So this is not an automatic reason to be bearish. But when you look at the VIX, obviously the VIX is also very important to monitor. We look at the VIX because it has an inverse relationship to the market. If the VIX is bullish, then the overall market is also going to do the opposite. What we're seeing is the VIX starting to show some life. This is not an automatic reason to be completely bearish, but it's definitely a warning signal. The VIX like this, the ES showing weakness like this, these are warning signals. But I am personally, I would rather love to buy dips, and that's what I really want to do, to be honest. I would love to look for extreme weakness, primarily in these chips, maybe AMD, Nvidia, maybe some Mara. What I'm definitely want to look at is Bitcoin. If we could get a retest on Bitcoin to around 93 and 95, maybe another impulsive move into the 80s, that'd be amazing, and I will most likely end up going long on Mara. So that is another, like, I wanted to go long on Mara a few days ago. I was greedy, and it's always better to be safe and greedy than it is to be early to the party. And essentially, I'm waiting for Bitcoin to take a bit of a more dip a bit lower. And thankfully, we didn't enter Mara just yet. Mara would end up being a better buy within 2021, the 2021 range. And that would put Bitcoin around 90, 92. So let's see what ends up happening on all of these different tickers. But for now, really, that's all it is. You can't automatically just be very bearish on a market when Tesla, Apple, Microsoft, Google are leading like this. If the majority of these tech stocks are starting to show a lot of weakness, then sure, go short. But these are still not an automatic, just, the risk reward is there. Yes, you could definitely go short. Yes, tomorrow we should get a bit more of a pullback lower, but it makes it way more easier to just lean bearish during day trading. And that's what we were doing, really. So I hope this makes sense. That's essentially what I'm looking at. This trend line was breached, and you could also take a look at the trend line on the NASDAQ here. We are not yet even at the trend line on the NASDAQ to retest it. So maybe, we might get a pullback down to these levels. I doubt it. But, a fast move to the downside could end up getting us a pullback down to this 510 area on the Qs. But it is what it is. I definitely am not I'm not bullish up here. Like, I'm not bullish up here. I'm not entering swing longs up here on the ES at all. It's just much easier to day trade and lean short. Okay, great. We could get June puts. Okay. June puts would be up 15%. If we'd gotten June puts up here, they'd be up, what, 15, 20%? We've made multiple 80% trades today. So it's not, it's just not really worth it, especially if the market is overall really strong. But yeah, seasonality-wise, we do get a bit of a pullback during this week and into the next week, etc. Great. But I'd rather be on the side of overall momentum, seasonality, strength. December tends to be a very strong month. I think I saw a stat. There was only one red month in December in history, or something crazy like that. So instead of, let's just take a look at how the market is so far for the month. We're negative 0.09%. If anything, these dips end up being bullish opportunities to buy the dips and end up seeing another move upwards. So let's see what ends up happening. But definitely, guys, this sort of impulsive, explosive, straight up move like this does not last. I'm expecting a larger correction into early next year. And that's where I think things get really, really tumultuous. In that case, it does make a lot more sense to get into puts expiring a year and a half out. Because even if the market ends up from here, from 60-50, we end up going to 60-30, 60-40, puts would be underwater, but you're holding something much further out, which will end up, in my opinion, not your financial advisor, not financial advisor, like it will end up down here because this sort of move is not sustainable. So with that being said, I'm just greedy at this point. I don't want to try to go short up here. I want it to make another impulsive move higher. Whether that happens or not is yet to be seen. But that is my thought process for the overall market. I hope this makes sense. Hope you enjoyed. And if you've been watching this long, I love you. Thank you so much. And have an amazing night. Take care. Have a good one.